Now it's recording. So most of the things you hear me mentioning, guys, are based on the SMB trading. SMB comes from smart money bookmarks. So if you heard me, if you had somebody, one of your mentors or one of the people that you follow in this space, you hear them talk about an order block in a different way that I talk about it. It's not because they do not understand what an order block is, or I do not understand what an order block is that we just see it from a different perspective. All right. So I do have certain terms that you may not hear from somebody else, or they talk about those terms, but in a different way. So everything I say on this call is according to my understanding, according to SMB way of trading. All right. So now, if we move from this sell side to this buy side liquidity, all right, I expect price to make a swing high, a swing low, a swing high, a swing low, a swing high. I'm not good at drawing. And then finally, we take this out. However, the problem is we do not always see price moving this way, because if price was to move this way always, it would be easier for us traders to kill these markets, right? Because sometimes price will not make this swing highs and swing lows. Sometimes price will make something like this. We make a swing high, a low, and then before we take this high, price will make something like this, and then go up, and then take these swing lows out, and then continue going up, and then it comes back, and then you wonder, how come we are taught that price moves in this way, but when you come to the live charts, this is not how price is moving, right? So this video is intended to teach you how price moves in this way, right? And how to identify when there are traps in the market, when price is trapping you so that you can enter and then you get taken out before price moves to your target. I think this is some of the things that we've seen happening as beginners over and over. You have a nice analysis, price takes you out and then continues to your target. Now, this is the daily chart on the Euro USD. Okay, I'll start all the way from maybe from here. Okay, now I want you to pay attention. If you have a notebook, you can write them down. It's okay, but pay attention because this is very important. Okay. So now we see price having this high here, and then we have this low. So therefore, according to SMB, price has given us a low right here, and now price has given us a high. So therefore, since we have a high and this low, I do not expect price to break this low. I should expect price to break this high, but this low has to be protected by all means. In any case, price breaks out this low, then I would be looking at selling the market. But at some point, price can come and grab liquidity, just like what we see happen right here. This is a grab of liquidity. I can allow that. What I do not allow is price to break this low and continuously keeps selling. In that way, I change my bias from buying to selling. But as long as price has not broken this low, I keep looking at buys. So anything that happens in between here is an accumulation for me. What I'm looking at is to make sure that this low is protected. Now that price has taken out this high, okay, this low is still protected. I'm gonna move my trading range to this high. So now that we've taken this high, it is identified as a breaking structure. That becomes my breaking structure. And now I expect price to come back and retest this broken structure. However, I do not expect price to break this low. So price comes back in here, okay, but fails to take out this low. Price goes back up and fails to take out this high. So price is stuck between this swing high and this swing low. Then something happens. I want you to take note of this inner structure, which is my level 2, this inner structure that was created as price was going up. We had a pullback, we break this structure, and then price goes up. Now, to some people, this is known as a smart money reversal. However, it is not, because we're still inside a bullish structure. So now I expect that when price comes back, we should respect this structure that was broken, all right, up to 50%. So from here up to here, I expect price to touch the 50% of this prior structure, and then my next target would be this high. Remember, I'm still in that bullish structure. I haven't changed my bias. I'm still bullish in this market. Why? Because we are still inside this higher time frame. The many structures, price is telling me bullish. We've created this supporting structure, bullish structure. So I expect a 50% of this structure to support price back to the bullish side. So now my next target would be this high, and I would call it a drawn liquidity. Even though my many focus on the target would be this swing high. Okay. Now look what happens. Price taps here. Obviously, I have to do the lower time frame to find an entry. That is for another video. This one, it goes up close to 120 pips, and then price reverses and takes out this. I have to zoom in, you can see price reverses and take out this swing low. Okay, now that we've taken this swing low, yet we are still inside this bullish structure, we have something known as opposing structures. According to SMB, if you've watched my videos, especially some of my old videos, I spoke about opposing structures. Where you are inside a bullish structure, at the same time price forms a bearish structure within that bullish structure. It becomes opposing structures, because one is saying, hey, we are buying, another one is saying, hey, we are selling. So those are opposing structures. Which one is opposing the other one? Because this structure that was supposed to support price up has been broken down, and in that process we created this bearish structure with a breaker block structure. right here. This is a breaker block. All these bullish candlesticks are breaker blocks. Now, if I take, now because I'm going to be using this breaker block, if I take a 50% of this breaker block, you'll see right here that once price broke this inner structure, breaking a 50% of this move, price came back to retest this structure up to a 50% of this breaker block, one time, two times. Now, that means I'm changing my bias to bearish, from bullish to bearish. Why? Because even if we are still inside this bullish structure, price is showing me that it's going against my bullish bias. By doing what? By breaking structures to the downside. All right. So now what I'm going to do is I'm going to wait and see if price is going to fail this low or if price will break it. So now we create this swing high, this low, I mean a high, a low, a high. And now what I'm going to do is I'm going to take this and move it here, take this and move it right right here. Okay, and why am I doing that? And then this break of structure, I'll bring it right here. So this becomes my break of structure. So now that I've changed my bias to bearish, I want price to support this swing high. I can allow it to grab liquidity, but it should not break and continue going up. Now my target is this swing low. I want price to break this low, and this high has to be supported. Price should not go above this swing high if we are bearish at all. So price comes up. Now remember, according to my videos, when price breaks a low, a high, a low. Now look at this. We have a low and a low here. So is this a swing high? And this is the swing low. We can measure it by 50%. Right there, if I zoom in, remember, according to my principles, is that after a swing has been broken, price should produce another move up to 50% of this prior move. If price does not go up to 50%, this swing high is invalidated. Let me repeat that. I will draw it here. So we're here, we break, we have a break in structure. Is some people talking while I'm talking? Because I see somebody saying please mute everyone. I don't even know how to do that. But kindly cooperate, guys, and mute your microphones. Thank you very much. Okay, so now once this swing high has been taken out, price is going to cheat you and come like this according to somewhere here, according to retail, that this high has to support price. But maybe let me leave this for some other for another session. Okay, but what I was trying to say is that when price comes back, for me to validate this as a swing low, we need to move 50% of this prior move. Okay, so take a fib all the way from here to here, if price does not touch a 50%, come into 50%, either touch it or go below it, then this swing is invalidated. And I look that if price were to reverse like this is going to be a liquidity setup. And I expect price to come, take it out, touch the 50% or below 50%, and then price continues. I hope that is clear. And let me continue now to the examples here. Where was I? Right here. Okay, so now I'm saying we have a break in the market structure here. We put in a swing low, but is this a valid swing low and a swing high? According to SMB, this is not valid because I expect price to either touch the 50% or go above 50% for me to have this as a structure. So this is not a structure to me. This is a trap, and I expect price to come and take it out. Now price produces a swing low, so therefore, instead of calling this as a swing high, according to SMB, we have a low, a high, and this becomes one structure. This becomes one structure. And then after that, price produces another move, taking out this short-term high. Price takes out, and now I'm looking at price supporting this high. We should grab liquidity, but we cannot have multiple candlesticks closing above, otherwise I'm going to change my bias. So now price comes, takes out this low, and now I move my horizontal line to this high, and then we produce the low, and now I have that as a breaking structure. And now this becomes my trading range. I expect price not to break this high. Let me see. Okay, everything's okay. I should continue. Okay, so now I'm looking at price supporting this high. We should protect this high by all means, because according to the order flow, price is bearish. And now let me just come back a little bit. Right here. When price was supporting, I was expecting price to support this swing low. We had a smart money reversal in here. You see? A low, a high, we break it, and then we come back. The question I should ask you is, if price forms this SMR, smart money reversal, within a bullish structure, does that mean we have a trend, a change in the trend? I want you to post your answers in the chat. If we have a smart money reversal inside a bullish structure, do we have a change in the trend? Post your answers, let me see. No or yes, that's all. Very good. The answer is no. This is a no. Why? Because this structure, this reversal structure is happening inside a bullish structure, and the only way we are going to have a reversal, it's when this structure is taken out. Then we know that the previous structure, having this structure taken out, we have a reversal. And that's why, even though we had this reversal happening here, price still came and supported this structure. As you can see, price still came in here and supported this structure. And this is the daily time frame. This is like a month, actually. No, more than a month, from March all the way to May, right? Okay, so that's what I wanted to let you understand. And now we continue. Now, price makes this low. And now some of the questions you're asking me is, how do I know if price is making a swing low if it's not a liquidity grab? I have said in my videos that when price is grabbing liquidity, it will be a short move above a swing high. Price will not move this way. Price will not make 50 pips above this swing high for it to be a grab of liquidity. Price will slightly move. We can have a wick, price touches and then wicks down, or we have a small candlestick closing here, and then the next candlestick will be bearish. That's to tell you that's not a swing that is being formed, it's a grab of liquidity. But I'll keep this one for the next session, where I'll show you how you identify a grab of liquidity with, or if it's a formation of a new swing high or a new swing low. All right. Now, look at this high. This high from here all the way up, price did not come to a 50%, no, above 50%. Is there anything you see that prevented price from coming all the way up here? What do you see? Can you type and let me know what you see? Somebody saying Isabel. I don't seem to hear Isabel. Can please, Isabel, mute your microphone? Okay. Yes. Prince, yes, there is an OB. Yes. All right. So now, somebody said there is an SMR. Yes, we have both an OB and a breaker block. This because price took it out and then came down. So this structure is a breaker. But then we have also an order block. We have this order block. Remember, an order block price can come up to 50%, or we can simply touch it. All right. Why is it an order block? I'll tell you why it's an order block. As you can see, price came. Remember, order blocks are created near support and resistance. So we see, I'm even forgetting some of these terms in according to the theory of support and resistance. Is this a support or a resistance? Is supposed to, yeah, this is a resistance, I think. So price comes into this, okay, and then price buys, and then as price is buying, we have multiple candlesticks to the downside. So everybody that was buying was liquidated. So this is a valid order block. And then look at this. Also, one thing you should notice, when price was coming, we created a trap. There was a trap right here. Why? Because the theory of support returning into resistance and resistance returning to support, it was right here. And then people were selling, right? People were selling until this huge candlestick takes them out. And people who trade breakouts, they add positions here and then they were taken out. And this is not to say anything bad about those who trade support and resistance, guys, because they make money. They make money. However, I do believe that when it comes to precision in the markets, smart money concepts, according to the way ICT teaches it, beats everything. All right? Okay. So now, let's continue. Let's continue. So now, price touches here. But this is to tell you also, even if price came into this breaker block, we still have a void, an opening in here, because when price, I don't know, price didn't come, but whenever price is going to take out this high and it comes into here, you're going to see a big reaction when price comes into this area, because it was not touched. Price should come up here. All right, so let's continue. So now price breaks structure, we form a low and this high. So I'm going to move here, a breaking structure right there, and I expect price to come and take out this low. Now, what does this teach you? This teaches you that whatever is happening inside this trading range rather, is none of your concern. As a beginner, of course, as an advanced, you can go in there, get killed multiple times until you can kill them back. But as a beginner, your eyes should look at the high and the low and that breaking structure and expect price to retrace back up to 50% or more than 50%, as you can see what happens right here. So now everybody who thought that price had created a swing high in here, what happened? They got liquidated right here. Okay. And then my next is this high and this low, and they expect price to take it. Now, I want to show you something, what I mentioned earlier, that price can either grab liquidity or come up to 50%. This is what happened. Price came to the high. We even went above it. You can see this week, that's a grab of liquidity. Okay, that's a grab of liquidity with a breaking structure and then price retesting to sell. But I do not expect price to continue going up. And that's what happened. And then we break this. Now I have a breaking market structure. Now I want this high to be protected. All right. And then I want this low that has been created to be taken out. This means as I follow this routine, I do not look at buying this market. Let me repeat that. As long as okay, brother, please. See you, brother. See you. Okay, right, let me continue. As long as I am having these formations that is telling me that the order flow is bearish, I do not expect to have, I do not look at buying this market. I can have a buying setup, but if I want to elevate my strike rate, my winning rate, I do not look for buys in a bearish market. On an advanced level, I'm able to find scalps in here, but that is to, what is that? What is the word? You'll be putting your capital in trouble, because the aim of a trader is to protect capital by all means. So price is showing that we are selling, look for sales. by utilizing these formations as a beginner. Okay, so if I use my fib from here, there, we go above 50%, have an order block in here. On the lower time frame, you can find an entry which we'll talk about some other time, and then price continue going down. And then from here, I do the same thing. And why do I have to? I do not do this when I'm trading because my eyes are able to identify these swing points. But as a beginner, you can use this so that you protect yourself from buying in a bearish market or selling in a bullish market. Because whenever you see these trending ranges, you already understand that the market is selling. So therefore, if you want to protect your capital and you know what you are doing, you shouldn't be buying. And even though I'm illustrating this on the daily time frame, you can do the same thing on the lower time frame on H4 or H1. I will show you, a few examples there as well. So you keep doing the same thing over and over and over until, let's just go fast forward, until price comes to this area and then something happens. So we had this high, and I have breaking structure. I like this color. Come on now. Yeah. Okay. And then we have this low, and I expect price to break this low, and this has to be protected. But then price comes in here, we go down, we fail to take out this swing low, price goes up, and in the process, we also break another structure. So we have a bullish structure created inside a bearish structure. What is this known as according to SMB? What is that called according to SMB? Yes, sir. Yes, that is an opposing structure according to SMB. It could have a different name according to other traders, other mentors, and that is okay. If there is one thing that I always stay away from is trying to talk nonsense about other traders. If you've been following me for a while, you've never ever seen me tweet anything against another trader. You trade support and resistance indicators. If you make money with it, thank God. That's all we aim for. Right? So now, according to SMB, that is an opposing structure. Why is it opposing? We have two guys here, sell and buy. All right. So now somebody might ask him, but Fidel, is it not possible that we could buy even though this hasn't been taken? On a advanced level, yes, you can. Why? Because you're gonna go on the lower time frame in here and look for that reversal. Let's check it out if it happened actually. If I go to M1, H1, let's see what happens. Yeah, so as you can see, we have that reversal when this high was taken, but because of news, as you can see, this was news, I think. This candlestick on H1, this is definitely an economical event that happened. I was expecting price to retrace all the way into this imbalance in here. Then you could buy. So this buy, it's definitely cancelled. So let's go back. All right. So therefore, when you have this on, as a beginner, you can sit on your hands and wait and see what price is going to show you. But on an advanced level, when this has happened, what I do is I go in here and wait for a reversal structure happening to say we are buying. And when I see it, I understand that this high is going to be violated or invalidated. But if I don't see it, then this will be regarded as a grab of liquidity to continue selling. If I see a reversal structure here, then this high will be disregarded. And that's a reversal structure we saw in here. But because of the event, on the calendar, this fair value gap was not filled, as well as price not come into our zone where we would buy according to the structures we saw on the 1 hour time frame. So price starts buying, and I want to take note of this area where price never came back. As you can see from the high, we didn't come back into here. So if price is ever gonna sell and comes in here, I want to take note of what is going to happen here. This is going to push price back up. Just take note of that. Okay. So in a similar way, just a second, let me remove this. So price from this high, and this did not move a 50% of a previous structure. And that's why I'm convinced that if price is ever going to sell to this point, this is going to cause a bullish move because price never came back. So now we form the high, a low, a high, a low. You see how price keeps supporting lows. So as a trader, this becomes my target. I want this structure to support price after this break of market structure, and then price goes up. And then this becomes like a grab of liquidity because we didn't see a full break in structure, and then price comes back down. But then there is something that I want to take note of. When price from this high inside of this swing, and when price made this low, you see this breaking structure in here. I expected price to come in the discount, right? But price touched this candlestick and then price bought. Therefore, when price came back, I was expecting that this candlestick is going to support price because it's a bullish order block, because this is the candlestick that grabbed the liquidity below this support level. As you can see this wick in here. So price comes back into this candlestick up to 50%. Price is supported to the bullish side. And now this becomes my swing low and then my target. Then something happened. I was expecting price to move and take out this high, but before that happens, we have this. We have this. And that is a high and this low. Let me just look at your charts a bit. May I ask whether you use previous days high, previous days low in high time frame, or just to use swing high, swing low? Okay, that's a good question, but maybe I'll come back to that. Let me just continue. Okay, so now I'll take note of this. Why? Because this is going to act as an opposing structure. Because I expect when price comes back, we should use the structure to support price to the bullish side. But then when price came, let's measure a 50% of this range. I want you to take note of that. So price comes back, touches 50%, we buy, then price fails to break out this previous high. Actually, we break this low. So therefore, since we've broken this low, I'm gonna move this in here and wait and see if price is gonna take up this this low. So price takes out the low and then forms a high where in this breaker, because now this becomes a breaker. So a 50% of the breaker, there we go, boom, 50% a price rejects. So now that price has rejected that, I'm going to cancel this low that was supposed to be protected. And now I'm going to use this as the high that has to be protected. And this low as a target, and my pool of liquidity or a draw liquidity would be this high, this low, I beg your pardon, this low will be my target. So price makes a high. I want price to break this low. It's taken out. Now that price has broken this structure and formed the low, I want this high to be protected. But the question is, according to SMB, is this a low? Is this a high? I beg your pardon, is that a high? Price did not come to a 50%, even though it was supported by this order block. So even though price was supported by this order block, I still don't regard this as a swing high. According to SMB, remember, not according to other traders, according to SMB, this is not a swing high. From here, a low, but this is not a qualified swing high. So I expect whenever price comes back up, it's going to take out this high, and then it will come in here and respect this structure and then retrace. That's what I expect. Take note of that. So now price creates a low, another low here. Remember, this is still open. We still have this open because price didn't come back up. So it's still open. So we make a low and then we break it. Now, right here, now we make a low, a high, we break it, and then we break it again. So this is to tell you that if price has made this low, this high, we have a low, price takes out. However, this move below, since this is a daily time frame, this low doesn't look like a swing low. It looks to me like a grab of liquidity. That's how I see it, a grab of liquidity, because we should see continuous move to the downside. We have one move, the second candle went down and then pulls back up, the third candle closed above. So this is a grab of liquidity, and then we go ahead to break this previous down candle and then this swing high, which looks like a grab of liquidity, but on the lower time frame, if you go like H8, H4, we would see a bigger picture on H1, and then now you can see how it's appearing. It looks like a smart money reversal. And that's why I was anticipating that when price retraces back down, I should see this order supporting price. and then price comes back into it, and then we retrace, we go back up, and then we create this candlestick that was broken. So I expect price to come back into it, and then price has to be supported to the upside. Even when price created this opposing structure here, if you might see, when price came back into it, it was supported. But now, because we had changed the trend in here, price had to respect the last down candle, which is the order block. All right. So now let me switch to maybe H8. Let me see. Let me see. I think this call is getting longer and longer. This is 45 minutes. So price will eventually come back into that mitigated structure to fill any imbalances and clean out liquidity, then continue to sell back down. Yes. Isn't that a buy side liquidity grab? Noah, which one do you mean on the daily? Right here? You mean right here? Come on, is my internet playing games? Okay, did you mean here? I mean the blue line. What is it? Ah, all right, I understand. Is this a liquidity grab? No, no, this is not a liquidity grab. Look at the size of the move that was produced after that break. This can never be a liquidity grab. However, if you move this to here or to the last swing low in here, then this becomes a liquidity grab. And that's why even when price came back, we didn't go below the blue line. Can you see that? Just look at the difference, bro. Look at the difference. Here. Can you see the difference? Price kept on selling. So this is not a grab of liquidity. This is a grab of liquidity. Remember, the difference is with a breaking structure, we see continuous move to the downside. And even when this structure was broken, we saw a return up to 50%, you see? So this is a valid structure. This is not a valid grab of liquidity. It was here when price, let me zoom in so I can see. When price took out this low with the wick, that was a valid structure. The next thing we're expecting was price to show us signs of reversal by taking out the previous structure like this. Now that price didn't do so, kept on selling, so this is invalidated as a grab of liquidity, and now we focus on the current grab of liquidity. Okay. So for this price, this is a short-term bullish move, okay? A short-term bullish move. So for me to say we have a reversal and SMR, I would want price to keep buying until these highs are taken. When you see these highs are taken, then we are in a bullish market. But price can come into here, reject, and then liquidate all these lows in here. Why is it that? Because I do not see this, because this doesn't look like a swing low. It looks like a grab of liquidity. But if you go to the lower time frame, it will seem like it's an SMR. So H1 can show you an SMR for a short term swing, but the daily will tell you otherwise. The daily will tell you, hey, the SMR I saw on the 1 hour time frame is for short term, but once we take out this, then we know we have a long-term reversal. So like for those who trade on the M1 and the M5, like NASDAQs and all that, when you see a reversal on the M1, does that mean we have a reversal in the trend? No, it doesn't mean you have a reversal in the trend. The reversal in the trend happens on the higher time frame. So H1 can have an SMR, H1, but then as long as it hasn't been repeated on the higher time frame, it is likely to fail. It is likely to be a short-term SMR, and then price continues. All right. So if, for instance, if you are a swing trader, you will not be looking for change of trends on the 1 hour time frame. You would be looking at H1 on the daily, because the SMR that happens on the daily is gonna cause a huge move before price returns. Okay. I have to look maybe for an example. Like when price took out the previous low, even if price was still in this structure, we have an SMR here. Imagine the amount of pips you would catch from here and then exit the moment price comes back in this structure. That's a lot. All right. So when you have an SMR, you've got to ask yourself, what time frame is this SMR happening? If it happens on M15, it will not mean that the trend has changed. If it was buying on the daily, you happen to have an SMR on the M15, it would mean that the daily is retracing to a certain point of value or point of interest before it continues going to the upside. But when you see an SMR on the daily, it means that even if it is just a retracement, that retracement is going to give you hundreds, if not thousands of pips before price continues. So you have to weigh, to put on the, what is that? You have to compare the strength of that SMR. If I see it happening on the 4 hour time frame, if I see an SMR happening on the 4 hour time frame, then like here, you see, this is an SMR on the 4 hour time frame. You see that? So this cannot be compared to the SMR that you see on the M15. The problem is that you take the change of, people call it, of character on the M15, and then you think it's going to change the trend on H4 and on the daily. It doesn't happen like that. This is where people make mistakes and they keep getting taken out. If you're, think of it like this. Think of it like this. If you take your analysis on the 4 hour time frame, that is the highest time frame where you do your analysis before you go to the lower time frame. How is it that when you see a change of character on the M30, then you call it a change in the trend, when your biggest time frame is on the 4 hour? So the highest time frame that you use for your analysis has to be where the trend, the change of the trend happens. Let me repeat that. If the highest time frame you use is the daily, before you go to the lower time frame for further confirmations, then the change of your character, of your trend, your SMR has to happen on the daily for that trend to change. I give you an example. Now price was bullish here. Everything that was happening in here that was not a change in the trend. Even if on the lower time frame H1 you would find the change of character in here, but when I saw price taking out these lows like this one, which became a breaker, look how much pips that was produced in here. So in here I can look for sales and rest be assured that I'm going to have a higher strike rate with a good risk to reward ratio, because I know the higher time frame is supporting my analysis. There is no way you will find an SMR on the daily to buy and then suddenly that SMR is violated. Even if it gets violated, price at least 500 pips before price reverses to invalidate that swing low. Do you understand what I mean, guys? Let me know. Let me know if you understand what I mean. Okay, so I'm going to open up questions, guys. I'm going to open up questions for at least 5 minutes before I can close this. Now, if you have a questions, raise your hand. Maybe I'll see you. I don't know how to use this stuff, but maybe I'm gonna see you. How do you even do this stuff? Speak of you like that. Or do you have questions, guys? I don't know how to use these things. How do I know who has questions? We should probably find ways of using Zoom instead, because I'm not. But anyways, what are your questions? Questions. The network cuts sometimes. I think it's your network, bro. I have a very strong Wi-Fi at my place. Questions regarding what I've just said? So there is a brother. There is a brother that who shared with me. I don't know if it was here when he saw price taking up this. All right, he said this is an SMR because to him this is a swing high and a swing low. According to SMB, no, that's not a swing low. Let me repeat what I said earlier. You have to compare the size of the move with the previous swings. If you think this is a low and a high in here, if you think this was a low, what is going on? If you think this was a low and a high, look at the previous swings and compare the size and tell me if there is any comparison. Look at the previous structures and compare with this and tell me if there is any comparison. Do you use swing high, swing low on one day? On one day, on the daily, is what I mean? Using previous days high, previous days low, on daily. I'm not sure if I truly understand your question, brother. I don't know if you're a brother or a sister, but previous days highs and previous days low, those are some of the liquidity points. So if you wake up and let's say this was Friday, okay? Friday there wasn't a good move. Let me use Thursday. Let's say you had a high, which happened to be the previous day's high. You have a previous day's low, and it happens that the previous day's high was the highest point, and the previous day's low was the lowest point that grabbed the liquidity. You see, look at this. The grab of liquidity in here, you see, is this a breaking structure, guys? No, that's a grab of liquidity. We should see multiple candlesticks the downside to believe that price is breaking structure. So now this is Thursday, and now forget that this is a previous day's low and high, because sometimes the previous day's low and high can be inside a trading range. But at this point, it happened that the trading range also is the previous day's high and low. So therefore, if the previous day's low supported the previous low in here, we only saw a grab of liquidity, but was not broken, and then it was a bullish structure, it simply means that I'm looking at a bullish market. So therefore, when the market opens London or New York session, I'm looking for buys, because previously the higher highs, I don't know how to say it, higher highs or what, all these lows were not violated. We only say grab of liquidity, but no structure was broken the downside. So therefore, if my trading range is showing me bullish market, I'm expecting to look for buys. And then I expect price to either take out this liquidity, and then I target the previous day's high, exactly what happened here. All right. If I go to M15, what is this? Right? Look at this. So price took out these, I'm sorry, lows. London opens where? London opens on this candlestick on M15, and we have this breaking structure. Price returns in the previous structure, not above 50%, but below 50%. Okay, and then we have an order block. Does price take out the order block? No, the order block is there to make sure that price is supported to the upside. Your entry is there, and then your target can be the next swing high. Does that make sense? Okay, so Moses says, so Fidel, I'm trying to grab a bit what you're saying. So always we should focus on S matter which forms on higher time frames, such as daily and H4. It depends the kind of trader you are. Let's say if you are a scalper, there's no need of looking at the daily SMR or H4 SMR. You would focus on H1, M30, M15. If I'm a day trader who wants to catch bigger moves, all right? Okay, this is how it happens, Moses. You saw the example I've just given you right here. I identified the trend on H1 as bullish. And then I looked for a reversal signature on M15. So therefore, instead of waiting for the daily to do the SMR, you've got to ask yourself, what kind of a trader am I? Do I look for bigger moves or smaller moves? So therefore, if you are to catch trades on M15, you can look at the trend on H4, H1, you know, even as much as H8, H10, look at the trend, look at what is the order flow of this market, and then look for continuation patterns into the next swing high. So you look for buys. But when you see a formation, an SMR formation on the daily, it simply means that price is going to be selling for a long time. It's a long-term selling market. Why? Because the daily is a big time frame. So the SMR on the daily means that the market is going to be selling for some time. If you see the SMR on the weekly, price is going to be selling for a very long time. If you see the SMR on H4, it's a short-term bias. All right. Do I have more questions? I have like 2 minutes to go. Manu, you say, so your bias is also determined by how much it has broken below or above the liquidity level. If several candles break the liquidity level, then it means it is likely to continue. If it is just 1 or 2 candles, it means likely reversal. Of course, there is more to it, right? Exactly. Look, I've said this stuff several times on my videos, but maybe they are so boring to watch. I don't know. Maybe I talk too much. I have no idea. Take, for instance, Mr. Manu, okay? If you see this high, and this high, or rather, let me give you an example with this one right here. I want you to compare. I want you to compare this move and this move, because this from here is not a swing, is not a swing low, and that's why price liquidated it. We have a low here. Can you see all this you see here? People will say a high, a low, a high, a low. No. This is one structure, a high and a low. This is not high because price hovered above 50%. This is a trap, and that's why when the news came, these guys were liquidated, but this low was respected. Can you see it, guys? This is what I'm saying. This low was respected. Can you see that? This is a breaking structure. What you call as a low is not a low. According to SMB, is not a low. Maybe to other traders it is, but this is not a low. This is likely to be taken out. So I want you to compare this with this. Can you see the difference? This is a breaking structure. This is a grab of liquidity. When price comes back, we have actually another minor breaking structure here of which you can take advantage of. But you see, price is still hovering below this. Okay, does that make sense? Manus, never boring, bro. I don't. Okay, this is amazing. Thanks a lot. The knowledge. You are welcome, brother Tamu. Perfect. Thank you. One more question and I'm done. Noah, bro. You got a question? But I have females in this call. What's going on? I don't know if Manu is Lady Tamu. I have no idea what's going on. You guys should probably unmuting and speak so that I can identify if I'm talking to a lady or. Perfect. When often can we be holding this session? I mean, how many times a week? I'll let you know, guys. I'll let you know because my time is tight. Now I'm trying to rush and take care of my baby because We have visitors coming, and I have to go right away now. I was the one which was testing SMB system. I know you know, I know you. I know you. By the way, is your question answered now? I think, were you the one that sent me this? Were you the one that sent me this and said this was a breaking structure? Noah, here. Let me know quick. Moses, you have to be the Moses from Uganda. No, that wasn't me. No, okay. So I have to leave, guys, because the call is now over 1 hour. You're welcome, Moses. How many people attended this call? Because Skype is showing me 10 of 28. What does that mean? Do I have 10 people? Do I have 28? I'm confused. How many people are in this call? Okay, so I understand. So I had 28 people in this call, and 10 of them are left. Okay. Okay, these are the ones left the call. Okay, that's cool. I think Saturday is not a good day because maybe most people are having time with their families. Oh, curious. Okay, yes. All right, so until next time, guys, the chats will continue on my Twitter. So thank you, Manu. Thank you guys for attending. Until next time, God bless you and stay safe.